All-time highs for the major stock averages are within reach. Now, after a topsy-turvy year, the S&P 500 is closing in on its February record high. And Nvidia, along with the Nasdaq 100, have scored all-time highs this week. At the same time, U.S. trading partners are rushing to make deals before the reciprocal tariffs pause ends on July 8th. Well, joining me to weigh in this morning is Gabriela Berrospi, who's the CEO and founder of Latino Wall Street. Good morning, Gabby. Thank you so much for joining me. Well, first and foremost, I want to get your thoughts on price action for the equity markets, especially with the S&P 500 inching closer to all-time record highs.
Yes, good morning, Remy. It's amazing what we're seeing. We all thought we would be on a downward trend because there's been so much conflict recently, geopolitically, and also with the Federal Reserve giving us all sorts of different statements about interest rates. That has everything to do with how the market behaves. But what we're seeing now is a strong market, it's a resilient market. We are in the green. It's amazing how the market never predicted that the war was going to scale, that it was going to be short-lived, and that we were going to find a solution. So I think it's very good news for all the investors that sometimes get scared when something happens in the world or internationally, and they think that's going to bring the market down. We actually saw the opposite, which is very interesting. But this just proves the demand and the resilience. And I think this is just the beginning because we haven't even started cutting interest rates.
Yeah, and you bring up a good point there, Gabby, especially given what we saw over the weekend in terms of geopolitics. So I do want to very quickly take a look at what we've been seeing in energy prices. And even despite some of the uncertainty with geopolitics over the weekend, right now we are looking at oil prices below 70 with WTI hovering right around 65 a barrel. So what do you make of prices where they are right now?
Yes, I think what we saw was actually the opposite of what we had expected. Normally, when there's fears of war, we're in this context, specifically with the Middle East, that's such a key place for oil. We tend to see the demand go up, the prices go up, right? Because then the supply gets affected. So it's supply and demand, there is economy 101. So the fact that we saw it drop, that just gave us a very clear sign that we were not going to see anything scale. So I think the energy sector, it is a good investment. It's probably not behaving the way we thought it would be, but I do think it's a good diversification option, just like commodities in general, like gold, like to diversify and have your money not just in stocks, but in a commodity is fine. And I think oil is a good option, but I just don't think we've been seeing it move the way we all anticipated. Wow, this is going to skyrocket because of the demand and the lack of supply this conflict is going to cause, right? Especially if Iran closed that passage they were talking about. But that didn't happen. That was just a threat and a statement. So I think we have to follow it closely. I do like it. I like the energy ETF, XLE. It's what, yeah, that's the symbol. And I have invested in Exxon and Chevron and the main ones that gives us dividends. I just don't think it's going to be what people thought, that they're going to skyrocket based on the current context.
Well, Gabby, we will have to leave it there for today. But as always, thank you so much for joining us, and thank you so much for weighing in.
Thank you.